Hello guys, welcome to the Trading Parrot. I got good and bad news for Ethereum holders. In this video we're gonna do a quick update. We'll look into liquidity pools, we'll look at how things are looking on blockchain as well for Ethereum, and I'll cover 3 bullish news for Ethereum as well. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes? The last time I covered Ethereum with a dedicated video was 7 days ago, but if you missed it, 4 days ago I covered a bunch of different altcoins including Ethereum as well. So let's go straight into the good and the bad news. The good news is that we are back in the range, right? We are back into 2.5k. We haven't entered any sort of dead cat bounce yet. We held perfectly well the golden pocket of 2.1 to 1952. That is the golden pocket of this retracement. So Ethereum must now choose a direction. Ideally we go into the golden pocket of the full retracement down from top to bottom that is located from 3k to 2.7. We've been slightly there as you can see there, but we haven't put a candle close there. If we do that, we reduce the chances of a dead cat bounce, as I've been saying for multiple weeks. Indeed, we've been repeating that for every single candle that you can see in there, and that is still the case. Thanks to those candles in here and those in there, we have created a trading range across all of this, and now we can see that the volume is the highest at this level. That acts as a magnet. This is an area where traders are really liking to trade, we could say, and I'm being sarcastic because that's what the volumes say, but probably people are sick and tired of being in here placing liquidity up and down as a consequence of the boredness, and you can see that that liquidity stands out on the extremes. If we enable 3-5x, you can see it right there, slightly from 29 to 3k, and we have another bucket at 33, but it's not the biggest comparing all these levels. And today we're gonna talk about 2k. 2k is the hair in the soup at the moment with all this advance that we have done. We are at the point of control in this trading range, so that means that we're just flat there, neutral. We have reclaimed this liquidity hunt that we did in here, but we haven't gone into the top of the range. And if we were to just achieve that, to go into the point of control and see a rejection from here, the next level to hit is the hair in the soup, 2k. Interestingly, if we go into 2k, we are still only hitting the golden pocket, so that is still not bearish enough to say we're going to have to go to the bottom of the range and hit 1200. Not yet. If we were to go into 1700, that is a red alarm that we are actually going to the low thousands. But just going in here, that is still a healthy retracement from what? From all this move up of 100%, then coming back down 30% into that red area of the 2000 is not a big deal. From the point of view of the daily RSI, we have a breakout. So the breakout says, no, we should be going for the top of the range, but there is an arm wrestling there. There is a problem. If you look at this area in here, we have breakouts in the past that didn't follow through. For example, this was a breakout from an area of 50 and it came back in the previous range. That still have a happy ending by going back into the 4000. But this one in here, for example, was a breakout and we ended up going from 2100 back into 1400. That is a move down of 30% from the highs around 2k. So I'm just preparing myself psychologically based on past performance in case, instead of what many people are counting with, that we are going to go to 3k, what if we go and we take the hair in the soup, which is the largest pool in the closest proximity at the moment. This is a move of 20%. If we go up, it's 13%, but it's slightly less. Notice that this pool is primarily represented by 3 to 5x, that level in there. If we activate the digits, so 10x and more, then we can see that the largest one then back again is 2.9k. So what I'm saying is prepare your area of risk being that hair in the soup. That is still doable, and it doesn't necessarily mean that the party is over. The message is allow yourself some flexibility for the RSI to do a move like this and then a breakout just like it did here, and in a different way, more positive, it did also in here. It is not a forecast. It is not guaranteed. Not necessarily we have to go and take the hair out of the soup. We can still drink it. And if we don't go there, let's cross fingers that the next candle close is a around 3K, ideally over 3K. Of course, I want a lot more, but then we're gonna start meeting with this resistance in here at around 3.2, 3.3. So I'm being realistic and I'm hoping that this next leg up gets maybe as high as 3.2, but it closes within the golden pocket. When it comes to longs versus shorts, we've seen everything in the past week. I think during the live stream on Thursday with my private members of Elite, we saw it below it and then back above it and then below it. There's been arm wrestling on whether longs are dominating or shorts are dominating. I'm happy that we are within the triangle, that we are not going for the plan of going into the lower percentile bands, because that is either the hair in the soup or hitting lower levels, possibly even 12K if we go here. So defending the triangle, being still in the squeeze is positive, is promising, and it keeps on top of the table the chance that we go for areas of nuts amount of longs. When we are on those areas, we're gonna be saying and slapping at each other, reminding ourselves to sell and take profits, because if you don't do, you can see that very shortly you stay at those number of excessive longs. I knew we were there and I did the right thing with Solana, with XRP, with many other coins, but I didn't do it with ADA, neither with Ethereum, unfortunately. You can tell that Ethereum remains at areas of social dominance pretty low, just 12%, much better than the 1% than we did in October in 2024, but very far from the peaks of 90, 71, 60%. So I'm aiming for a 29% in retail. Once we get in here, probably we're gonna be seeing Ethereum doing maybe a revenge rally into 60s or something like that. If we do that, we need to keep an eye on how we land in here, and the next task at hand, guess what it is to defend this trend line. If we reclaim this, ideally we want to be above 2900. Why? Because we don't want to be seeing this line as a line that rejects us back into lower lows. When it comes to CryptoQuant, things are looking very positive or neutral. We could say there is a mix of both. We have taker buy dominant, which is a sign that the bulls are starting to step in. There are 3 bullish news with Ethereum, but before, let me tell you about the 30,000 that you can get in trading bonuses if you sign up with my link on 2bit exchange. The best thing is that you get $50 just by signing up. Register, open the account, $50. Of course, don't trick the system. If you have opened multiple accounts, you're not gonna get to accumulate and milk the cow endlessly. No. But you can open the account with not KYC, so that means that in just 2 minutes you get your $50 and you can start trading with crazy amounts of leverage. I'm just kidding, don't do that. 1,000 trading pairs and support in every single country with no KYC needed is fantastic. We got 3 bullish news on Ethereum. The most bullish one is at 8 out of 10. US spot Ethereum ETFs book 61 million net inflows on July 7. That is yesterday. BlackRock's Ethereum top the list. Institutional demand is accelerating again. Fidelity is also part of the party. Persistent inflows tighten the liquidity supply on exchanges and reinforce the bull case that anything below 3K is value. Coming in at 7 out of 10, we have the crypto miner Bit Digital shifts its entire. We covered this news in the previous video about Bitcoin. Basically, there's 2 or 3 companies that somehow they are flipping or act from BTC into Ethereum. One of them, I think that's Bit Digital, and there's 2 more that are increasing their holdings on Ethereum. There is a growing institutional conviction in Ethereum's yield-bearing proof-of-stake model. And 6 out of 10 is Vitalik battering backs EIP 7983 16 million gas cap proposal to curb transaction bloat. The draft hard fork sets a stricter per block gas ceiling. Gas ceiling sounds like something really positive to me, aiming to bound resource usage and keep base layer fees predictable as layer 2 traffic rises. Cleaner execution environment and lower variance are viewed as a plus for long-term network health and valuation. I don't know why this is just getting a 6 out of 10. To me, it sounds solid as long as it actually works and it doesn't cause any damage during any upgrade. Let's do a quick wrap up. I will say that we have a good chance to hit the 3K coming in as part of a institutional support coming in, and potentially Bitcoin dominance also coming down eventually in 2025. It has to happen. I hope so, right? So 3K and 3.2 seems like doable, but that theory doesn't exclude a potential last shakeout into this area of the golden pocket. If we only do it until these levels of 2K or slightly below it at 1965 on a candle close basis, then we are going to see one very repetitive pattern in the RSI, which is that the first breakout is a fake out. And since we broke out from 55, I'm not even gonna look at the chart the day that we go into this area in here. If we only hit $2,000, well, I told you so. If we don't go into 2000, I think it's very easy that we get into 29 and we start hitting the degens that are piling up at the moment in terms of shorts right in this area. Thanks so much for watching. Next video is gonna be Doge. Don't miss it out. Be subscribed to the channel, write down comments, and like the video for F's sake. See you next time. Bye.